a trade I took yesterday on EU euro dollar. Now it was posted in this trading room, right before it actually happened. We talked about the daily cycle of the currency pair, right? This is usually for any currency, we'll see this kind of pattern appear day after day, right? In consolidations, and we see a price expansions, right? And then we see a reversal during the London sessions, right? And the price go another expansion to the directions. Then we see a pullback during the New York sessions, and then continue, finish the day, and eventually profit taking, and then we go back to consolidations again. So it looks something like this. You can see this bar chart or candlestick chart, right? The opening price, make a high, you make a low, which is here, and eventually profit taking, and you close here, right? So that's how the formations of any kind of candlestick on any time frame. So if you can truly understand, make use of this simple concept, open, high, low, close, you actually can make quite a good profit in this market, right? So this is a trade that I posted yesterday before it even happened, right? Again, this is where the European sessions, and I expect the price to reverse during this area. And before that, right? Of course, I expect the EU to be bearish. My bias is bearish. And this is during the Asian market. We understand that Asian market usually the price not going anywhere, right? This is during the Asian market. Market just goes sideways. It's not going anywhere. So when the Frankfurt market open, European market open, we see the price start to expand. All right. And during this time, we can expect some kind of retracement over here. Reversal. And this happened coincide with this trap order over here. Okay. So yesterday I was looking for in front of my laptop, waiting for a pullback, a reversal to enter here, right? And this was actually posted before, right? So if we take a look, go back and see the subsequent post. Okay. All right. Consolidations. Your first entry usually happen during the European sessions. Now, if you miss the first sessions, right, by New York session, they most likely will give you a second opportunity to get in, and then it on all the way until about late London sessions when the London market is about to close. Then you see trader want to go back home, they start to take profit. Then we see the price go into consolidations again. So this is the daily cycle I talk about. Right? It happened over and over and over and again. All right. So this was a trade, and yeah, that's was a trade, right? At 7, you can see at the trade was posted in the afternoon, right? 4:25. So by 7:47, you can see that price has already reversed, right, and back down to this area. And now we are entering into the New York session for potential for this second entry, right? So this area, right, you can actually take your profit and be happy about it, right? If you can, right, usually New York session we see some kind of pullback before it continue to go lower, right? Pull back before continue to go lower, and eventually profit taking, go back to consolidations, right? Okay, so this is a euro dollar. You can see that I start off from a higher time frame, and obviously we can see that it is bearish all the way from daily. Okay, and we see the price start to looks like reversing, right? It looks like going to reverse now. But before that, before I go there, I'd like to show you that this money time frame. Look at this low here, and look at how the price come back to test this low now, right? So this is important low, yeah. You can see that, all right? And this low is rarely up, okay? Took out this high, price pull back, test one time, okay? Now test again. Now we can expect a pullback, okay? A pullback before go lower. Okay, so of course this one we can't see on this money time frame, but when you go down to lower time frame, we will see opportunity happen everywhere, right? It can go down first or then go up and then eventually go down, right? So this from the monthly time frame. Now, if you go down to the daily time frame, you can clearly see that it is bearish, right? And the price has made a low, which is the monthly low over here, right? Just like I show you, this is a monthly low, right? And immediately the price show a force that you want to go higher. Can you see that? All right. And it took out this high. Okay. And then after that, we can see the price now in consolidations. Now, just like I say, right, we are hitting on the monthly low. So potentially we might even see this pullback higher before even go lower. All right. So this is again a longer term view. Yeah. Now going back down to 4 hourly, right, we can see clearly that it is in consolidations, right? You can see that we are in a, we see this in an uptrend before, right? Uptrend, right? Until here, you can see the price start. This is a lot of selling, right? You can see that it's a lot of selling, and it took out this low. Okay, those traders who are bearish, when they see this bearish candle, a lot of people worry that it will just drop and they start coming in to put in their sell in the market or sell stop. Their stop loss could be above here. All right. And the price immediately reverse up. Okay. Reverse up. And you can see that it reverse up, took out this high as well. Right. So some of them who place a stop loss above, now they are taken out again. And after that, market drift a bit lower, and then you see this ERC, bearish ERC down again. Right, this bearish ERC down, took out the low here, took out the low here. Right, look at this, yeah, low, right? Below there are a lot of stop loss. Now, when this bearish candle happened, it gives the impression to the trader who are bearish but not yet going to sell. When they see this selling, right here, well, we have one high and now like this, right? And they worry that the price might just drop off, right? So they start to go into sell and they stop loss above here. And you see what happened to the price? Immediately it swing back up, right? And took out the stop loss. So these people who sell, the short seller, right? Once the price goes up, it took out all the short seller. Okay, so all the sellers are gone. Now for this bullish leg, right? When the trader, now this is a 4-hour time frame. When we go down the 1-hour time frame or even lower, this is a very, very bearish. This is very very bullish, right? So this movement attract a lot of potential bull. You can see that all are green candle, right? Very bullish. It attract a lot of potential bull to come in to buy. And what happened is their sell order is right below all this candle low. Okay, so these people buy. Some people buy at the breakout. Okay, and they're happy. They think that price is going to challenge this high, but price did not go up the high, right? The price immediately turned around, right? And now it make a lower high. Okay, so you can see that this is in a period of we say that it's in consolidations, right? But during consolidation, we see a lot of this kind of manipulations, stop hunting, right? This is something that we can expected. That's why we try not to engage any trade during when the price in consolidations. But even though we say higher time frame in consolidation, but if you go down to the lower time frame, right, we will see a trend. Okay. Anyway, that's beside the point. Yeah. Now the point which I want to share today is this. All right, the trade I took on the EU, knowing that this is I have a bearish bias, right? So this is where Asian session, right? This is Asian sessions. You can see the price just go sideways. Immediately you look at this kind of movement, you know it's Asian sessions, right? Price is not going anywhere. So when Frankfurt market open up, London market open up, we see the price start to surge. Okay. Now, first of all, I have a bearish bias, right? So I'm going to use the concept open, high, low, close. Now, I know that if I have a bearish bias, which means that today, right, it's a red candle, the opening price is going to be here, right? And we have a high, we're going to have a low, and we're going to have a closing price here, right? So if this is a bearish day, the closing price is definitely going to be below the opening price. So my bias is bearish, right? So I wait for the London session market open. I already anticipate that price is going up. I'm not sure you will go up now, but I'm hoping that you will go up. And then when the market go open, let's go down to 50 minutes time frame. You see what happened? The price go up exactly to this, right? Short order. Can you see this? Short order. Price went up, right? This is exactly where my AOI. I was looking at this as my AOI, right? The price went up. It took out the Asian high, the liquidity, going to this trap order. And this area here is where I'm going to look for a sell. Okay. And when I look for a sell, I want to add my odds even higher. So what I do is I use the time and space, right? Using the time, right? To add into my trading plan. So when I go down to, let's say, lower time frame, 2 minutes time frame, this was what happened, right? This was here. This is what happened. You see this pink zone, right? This is the area of my, this is when the London market open, where I expect some kind of reversal here. Okay. So 1 hour. Sorry, 1 minute. So you can see here. Okay, this is a 1 minute chart. Price went up. See this candle, right? Price went up, right? We continue to see bullish order flow all the way up here. Okay, until here, see the price again go sideways, multiple high. Price went up one more time. It liquidate all the stop loss above this swing high, and aggressively you can see the price swing down. All right. And what happened immediately after this? We see we have a stop hunting. We see a break of this structure low here, and immediately what do I see? I see this gap here. Can you see this gap? So when the price came back here, right, I just sell at the market, and the price went down. It tested the low here, and it went back up, right? Okay, it went back up. And this all happened during the London session, the first reversal period, right? You see this color, the area where the zone where color is the expect the first reversal, first entry. The price went up. My stop loss was above here, so it was safe, right? Price went up, and into the 5-6 o'clock, you can see market start to go down, right? Now at this point in time, right, I decide to take my profit because it started to go sideways. Right. Remember our 8 o'clock in New York market open is a second opportunity to short, right? It's a second entry. We expect the price to pull back. So let's see the price start to go sideways. I decided let's take the profit and go, right? And because if the New York session start moving it back up, right, and it failed to go down, then I will lose all the pips, right? Isn't it? Right? So I decided to take my my profit here, and I told myself if the price go back up again, right? And I like to enter, but I did not see that happen when 8 o'clock the US market open. Okay, it didn't happen until and the market continued to drift lower and lower and lower. Now remember this green zone. This is where the London market closed. London market closed, where traders start to square off their positions, like taking profit, and the price start going higher, right? And even after the London market closed, you see the price go into consolidations again. See, consolidation again, and we start all over again, another trading day. Okay, so this is a very powerful concept. If you understand, if you have a bias, right? If you have a bias, and your bias is bearish, right? So we have, when it's a bearish bias, we know that opening price definitely is going to be higher than the closing price, right? We are going to have a, this is a bar chart, of course, all right? But if you join them up, it's actually a candlestick chart, right? Okay, so the opening price is here, the closing price is here, right? So if I have a bearish bias, if my bias is right, I know that the closing price is definitely going to be lower than the opening price. So what I'm going to do is I'm going to sell above my opening price. And this is exactly what happened. You can see that this is the opening price. As the price goes up, I took a sell here, right? Everything according to this open, high, low, close concept, right? So the open is here. This is the opening price. Erase off again, right? This is opening price, and you see the price goes up, make the high for the day. Then during the day, you see the price start trading lower and lower and lower and lower and lower and lower. Of course, it sometimes go up, right? It go lower, it go up, go lower, it go up, go lower, it pull back, go lower, right? But the general direction is down, 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 down until it make the low for the day. Eventually, it close, right? Somewhere here. So I took a short here, right? The opening price. I took a short here. I take a short above the opening price and take the profit, right? So I know the closing price is definitely going to be below the opening price. Okay, so it's a very simple concept. I hope that it makes sense to you, and if you can really understand this concept, it actually helps and able to spot some good opportunity. All right, that's it for this short video.